Important thing to consider is integrity matters. High quality credits require real, additional, and verifiable improvements. Always choose credible partners and program, and that's where Compeer comes. So we'll help you on this journey. We are here to guide you. We'll help you navigate the option, understand the commitment, and align carbon opportunity with your operational goal.
Welcome to Compeer's Ag Edge, brought to you by Compeer Financial. In each episode, we break down complex agricultural economics, policy dynamics, and farm business topics into conversations that make sense for your operation. We're here to help you stay informed and confident about the trends and decisions affecting your agricultural business.
Well, good afternoon and welcome, everybody. I'm your host, Bryan Stanek. I am joined today by Dr. Anil Koirala. He is a fellow colleague who's been helping Compeer research the carbon marketplace and forestry market space over the last several months. Compeer has had a really big amount of emphasis in trying to develop education series that benefit farmers and landowners. We feel like it's part of the value to bring to farmers. And along the way, we stumble across topics that we think, hey, this definitely would add some interest to folks, especially as they're trying to explore options of today, carbon marketplace. Obviously, it's a difficult topic, a very broad topic. And today we thought to benefit everybody along the way, we could break this apart into two different channels, the way that we're prospectively looking at program builds and loan options over the next several years. There's opportunity, there's risks. There's a lot of unknown, and there's a lot of different nomenclature that goes along with understanding this marketplace. And I'm proud to say that Anil Koirala and I had met last fall, and he's definitely accelerated our knowledge and my knowledge into different market spaces, especially the forest market space. But it's so connected in its terms and outcomes that today we've asked Anil to throw together a slide deck for us and try to explain the different avenues. And like I said before, try to adjust the risks and really try to bring some sense into the situation. So certainly along the way, we probably have some topics that I'm going to be thinking about too that I'll be asking you. So again, Bryan Stanek, Managing Director of New Markets here at Compeer Financial. My home is Wisconsin Dells area. It's great to be with you all. Anil Koirala, I'll let you introduce yourself.
Hi, everyone. Thanks so much for joining us today for this session on agricultural and forestry carbon market. My name is Anil Koirala. I'm the part of Compeer Financial New Market team. My role is VP of Sustainability and Carbon Market. I've been working closely with Bryan on this emerging and new opportunity, including carbon. We're excited to walk you through what can be a very complex topic, right? I think the carbon market is a complex topic, but we have to understand, we have to simplify it because the carbon market is directly connected with landowners and farmers and how they can enroll. So we'll try to simplify these things for you today. Here's what we got today for our agenda. We'll start with the basic overview of the carbon market, what they are, how they work, and who are involved, right? Then we'll talk about integrity challenge. That's a big challenge in this space. A lot of news surrounding that. After that, we'll do two deep dives, which are of concern to our farmers and landowners. One, soil carbon program. The next one is forestry carbon program. Towards the end, we'll share what Compeer is doing in this space to help our landowners navigate. And we'll wrap up with key takeaways of this webinar to simplify carbon for you. The goal of this session is to make carbon market a little less intimidating for you guys and a lot more useful. We'll not focus so much on science behind carbon cycle or atmosphere and everything, but we'll more focus towards the market, especially for those of you who work the land and want to understand how this all connects to your operation, your farm or your forest operation. So that's what we are mainly focused today. Now, let's break it down. A carbon credit. What is a carbon credit? A carbon credit is a certificate or a unit that represents 1 metric ton of carbon dioxide equivalent greenhouse. So that has either been removed from the atmosphere or reduced or avoided. These carbon credits are issued by independent programs and tracked through carbon registries. Every carbon credit has a unique ID, so it can be traced and verified. So how do people trade carbon credit, right? So there are two types of market. One is the compliance market, basically the government regulated market. And the second one is voluntary market, which we'll explore in a bit. Now, let's start with the compliance market. So in a compliance market, the government, that's the top, they set a limit or cap on how much greenhouse gas emission are allowed by the companies. So the companies receive emission allowances under this cap. So the government will notify you that this amount of cap emission is allowed. Now, these companies, they can buy or sell those allowances depending on their needs. So let's say if a company emit less than their cap, they can sell their extra allowances. If they emit more than their cap, they need to buy more. So it's a regulated market. So this creates a financial incentive for companies to reduce their emission. It's not only penalize company for having more emission, it also reward company which are doing less emission. So we have to understand both things. It is not only penalty, it is reward system also. Carbon offset projects like those from agriculture, see the figure in the bottom, solar project, agriculture, forestry, EV, electric vehicle, all those projects funnel the carbon credit to this market. The primary market is basically the market, compliance market, and the secondary is you can sell derivatives or you can sell options of these carbon credit in future. There are 38 compliance market operating globally. Most of the Western United States, Canadian states, EU, China, Australia, and New Zealand, you name it. There are other 22 programs which are under development or are in consideration. Brazil, Japan, India, all these countries, they are exploring compliance carbon market. You may have heard about some big names, right? California Cap and Trade Program. California Cap and Trade Program was started in 2005 by Governor Arnold Schwarzenegger, the movie star. There is a Washington Cap and Invest program now. The EU emission trading system is the largest compliance market in the world. Altogether, these markets are not small. The market size is 940 billion as of 2024. That's a big market, the compliance market. We'll talk about voluntary market and their size. You will be surprised how big compliance is compared to the voluntary market. So the voluntary market is where companies and organizations choose to buy carbon credit, even if they are not legally required to. So the name itself is voluntary, right? So why do they do it? First of all, sometimes they do it to meet internal net zero goals. Sometimes it's about their ESG reporting, and sometimes it's just to show customers and their investor that they are taking their carbon footprint seriously. So to become a good company, that's the answer. Now, so what makes the voluntary carbon market work? There are 4 groups, as you can see in this diagram. The first one is standard issuer, or also known as registry. These guys are record keepers. They issue, they serialize, they track, and they retire credit. The second are developers. So these are the folks on the ground. They create the actual project. They are the one who goes to the landowner and farmers and talk about the carbon project. They do activities like planting trees, improving forest management, switching to no-till. So they help you on all these aspects. They also measure and verify the carbon impact. Now, there is a new trend coming on called broker or exchange. Brokers are the middleman, like in all business sector. They help buyers and sellers connect. They negotiate deals, they bundle the credit, and they help companies find credit that match company's goal or their brand. So that's what brokers do. Now, buyers, of course. So the carbon market, the voluntary carbon market, we have to understand it's a buyer's market. If there are no buyers, then this market will definitely, it wouldn't exist, right? So the buyers, starting from tech giants to food brands, they want to offset part of their emission. Some buy for their brand value and other because of their investor pressure. So the buyers sometimes go directly to developers and buy credit. Sometimes they use brokers. There are 4 main players, as I said before: registry, Vera, American Carbon Registry, and Climate Action Reserve. These 3 are the 3 main registry in the United States. There are others too. These are just an example. Now, the project developers. In the soil carbon side, you might have heard about Carbon by Indigo and Trutera. Now, on the forestry side, Family Forest Carbon Program from American Forest Foundation and the Nature Conservancy. There are others too, for example, ANU or Finite Carbon. Now, the brokers. The trend in brokers started just a couple of years ago. There are many developers now. So they are all trying to sell credit to Microsoft. Then what will happen, right? So Microsoft have to choose either 1 or 2 or 3 developers. So that's where brokers come into play. So they will buy credits on a wholesale level from the developers. They will package it, make it look nicer. They will bundle soil carbon, forestry carbon, industrial carbon all together. Think about share market. You have probably heard about ETF, mutual fund. So that's what these brokers do. They diversify the portfolio, they patch it up, they make it nicer, and they go and sell it to buyer. And the buyers at the end, these are big tech giants, entertainment company, airline company, you name it. Anyone can become a buyer. Any corporate can become a buyer. At current, I think 4 or 5 big companies, they control this market because they purchase more than 60% of carbon credit. But there are many other smaller buyers who try to decarbonize their footprint. Now, let's go to the market size of voluntary carbon market. As of data from November 2024 data, it is expected that the voluntary carbon market will reach 1 to 3 billion in value. Think about the compliance market. It was 940 billion. So the voluntary carbon market is still very small. But the chances are they will go bigger. And there are different scenarios, high demand scenarios, low demand scenarios. By 2030, the market is expected to become between 7 to 35 billion. Again, it will depend on the low volume and high volume scenario, all these different colors. And then by 2050, it is expected that the market could reach up to 250 billion. So that's the high demand scenario. So that means a lot of things going on in carbon market, and probably there might be big opportunity. Now, the market is voluntary, right? So that means if the credits generated are not real or they are not good, then the voluntary buyers, they will not buy it. So what's the issue here? I think in most of the carbon presentation, you will see only good things about carbon. Oh, carbon is good, carbon credits are good, you should enroll. But we are trying to show some negative aspect or some negative bad news about carbon as well. There are just a few examples of many published articles in last couple of years questioning the credibility of some carbon offset program. So the issue at the center here we have to understand is the integrity. So making sure that carbon credit represent real, measurable, and lasting impact. If carbon credits are not doing those things, then why would anybody purchase those credits, right? So some projects in the past were found to be over-crediting or not delivering the result they claim. So in other words, greenwashing, right? So that kind of bad press has made both buyers and also our landowners and farmers very cautious about this market. Rightfully so. That's why whenever I talk with farmers and landowners, they will say, is this market credible? Right? So they will always ask about this question. So because of this bad press. And there are some good reasons behind that. Now, let's talk about good news. A lot of work is happening to improve transparency and accountability on the both sides. Both sides means supply side, supplier means the developer side, and the buyer side, like tech companies or other buyers that the carbon community is trying to be involved in. Let's start with the supply side. So this is about the quality of carbon project themselves. So it is about your land, your forestry project or your soil carbon project. These projects are now being evaluated using something called Core Carbon Principle, CCP. And the group behind this is known as ICVCM, Integrity Council for the Voluntary Carbon Market. They set the benchmark of the quality of carbon credit, ensuring the credits are real, additional, and verified. Now on the buyer side or the demand side, there is also growing pressure on that side too. That means companies, buyers, they can't just buy a bunch of carbon credit and call themselves net zero. So now I think there is a mechanism. Instead, they are expected to first reduce their own emission and only use offset for the part they can't avoid. So groups like Voluntary Carbon Market Integrity Initiative, which is also known as VCMI, are giving companies guidance on how to do this the right way. So they don't overstate their impact, their carbon footprint, or they can't do greenwashing. So this push for integrity helps protect the entire ecosystem. I think this is good for everybody. It's good for landowners, it is good for farmers, and it will build confidence for landowners like you who want to get involved. So these things are happening as I speak. These guys are reviewing all the methods and protocol behind carbon credit. So stay tuned. Maybe in end of this year, I think we'll have some nice news about carbon market. Now that I explained about compliance market, voluntary market, what is carbon credit, these belong to the section called Introduction to Carbon Market, right? Now, our focus will be for our farmers and landowners, our clients. So now we'll dive deeper into the soil carbon space. And then after that, we'll talk about forest carbon space. Let's move into the first deep dive into soil carbon. Soil carbon sequestration. What is that? Soil carbon sequestration is the process of storing carbon in the soil through natural system. So it all starts with basic science from the high school, which is called photosynthesis. Plant pulls carbon dioxide from the air, as you can see in this infographic, and plant store it in their biomass in rows. So all these little seeds on the ground, you can see plant pulling CO2 and then storing the carbon. Now, after the plant decomposes, a portion of the carbon becomes soil organic matter. With better practices like reduced tillage or cover crops, we can help the soil store more carbon over time. So that's what on the carbon credit. It's a little bit complicated, but I'll try to simplify again. The more your practices differ from the baseline, the more they will improve your soil health. The greater the carbon credit potential, but we have to think about this thing very carefully. Every farm is different, like every forest or every trees are different. So which is why eligibility, whether you qualify or not, comes into play. That is very, very important to decide. As a segue, we'll talk about does your property qualify or not, whether you qualify for soil carbon program or not. To qualify for a soil carbon program, several things needs to be considered. First is your cropping system. That's important. For example, a corn or soybean rotation may have different potential than continuous wheat. So these all depend on the rotation. The carbon developer will explain more about this to you, but just a general idea. Now, second is the soil type and condition itself. Sandy soil store carbon differently than clay-rich soil. All soil types have different potential. Now, third is your history, right? What are your practices, history of practices? If you've been practicing, let's say, for example, no-till for 10 years, the newness of carbon gains may be limited because you have already been doing it. And then you have to think about a different agronomic practices. Now, if you switch from full tillage to the no-till or reduced till, then it might offer you some more upside in terms of carbon credit. So that is also an important thing to consider. Now, the fourth is the control of your land. If you lease the land, your agreement needs to give you the authority to implement and commit to long-term changes. So that's what you need to know when you lease. If you own a land, you are eligible to qualify as well. Now, these all four factors will determine, help you how much new and verifiable carbon your land can store and whether your projects would qualify for the carbon credit or not. Now, based on these, we have created a table. So, soil carbon decision, whether you enroll in this program or you don't enroll in this program, it will depend on several factors. As a disclaimer, this is not the exclusive list. There might be hundreds of questions you can ask, but just some important. There are 4 key areas to think about. First is your practice change evaluation. Ask yourself if you are ready and able to adopt new practices such as cover cropping and reduced tillage. For example, if you are already using conservation methods, your room for improvement probably limited, right? So you have to think about that. Now, second is economic viability. This is the most important from my point of view, I think, because will carbon payment and the co-benefit like soil health improvement, your cost regarding that will exceed your revenue or not. So that is important thing. If it doesn't cover your cost, then probably it's not a good idea, right? It will lead to your negative ROI and you might have to reconsider your participation. Now, the contract length and flexibility. Most of the programs have a multi-year commitment like 5, 10 or 20 years. There are some programs now which also allow you to enroll for just 1 year, so which is a good thing, but you have to consider the contract length. Now, crop rotation compatibility. So that is also important because it's important for you and your land. Does your current crop plan align with your program guidelines, right? Monocropping is often discouraged in the carbon program, so you have to think about the rotation. Lastly, but very important, are you comfortable for data sharing? Because probably the developers or these companies might use your data for modeling or even to share. They will share to larger audience. So that should be clear beforehand, before you sign the contract. So if you say yes to all of these things, probably you are a good candidate for the soil carbon program. You can go and proceed with the enrollment. Again, this is not an exhaustive list, so you might have more questions than listed here. So these are all about soil carbon program. Now, we talked about soil carbon. I will say this, I'm not an agronomist. I'm a forester. I enjoy talking about soil carbon, but I think I'll enjoy more talking about forestry now. So let's switch gear and talk about forestry carbon. What's out there? I've been forester my whole life. I studied actually forestry during my high school. So I'm more interested on this one too. So forests don't just store carbon in the trees. They store in many places. For example, live above ground tree and soils. The second one is live below ground. It's in the roots of tree biomass. The third one is dead wood. Forests also store carbon in the dead, standing or fallen trees. Fourth one, litter in the forest, right? All these materials, leaves, twigs, pine needles, you name it. And third one that we explained in detail before, it's the soil carbon itself. So that means forestry has a larger amount of carbon compared to the agricultural land. So we have to think about it because trees are bigger, they are giants, so they store more carbon. So now that you know a little bit about the different carbon pools in forestry, we'll talk about what are the project types. So there are three main forest carbon project types. The first one is afforestation and reforestation. So afforestation and reforestation, this is a basic science. You are just planting trees. You are planting new trees in areas that were previously not been forested or maybe deforested long time ago. It is good for land that was cleared decades ago or currently underused or marginalized land, in other words. Now, the second type of forest carbon projects is known as avoided conversion or AC. So this is all about protecting the forest, protecting and not allowing the forest to convert into any other land use such as agriculture or development. So it's keeping your forest intact. In United States, the illegal felling or deforestation problem is very low. So that's why these AC projects are more famous in tropical countries. Brazil, there is a problem in Amazon forest, right? They are famous there. Rainforest areas such as Indonesia or Burma. Now the third one is called improved forest management. Improved forest management is the most common carbon project type in the US. Improved forest management project is managing your existing forest to maintain or increase the carbon stocking level on these forests. As a landowner, we can think about this. We harvest often, maybe in 5 years, maybe in 2 or 3 years, we do some thinning, and sometimes we do some clear cut. Usually the rotation here, the timber rotation here is shorter and cuts are more aggressive. Now the project scenario shows a landowner adopting the improved practices. I would say carbon practices, right? So for example, extending your harvest rotation. Rather than harvesting in every 5 years, maybe let's extend it to 10 years or 15 years and maybe thinning less often than required. If you have your land, your hunting ground and very nice forest, why would you want to harvest all the time, right? You need woods there for your wildlife. So that's thinning less and retaining more mature trees. So these changes lead to higher forest carbon storage over time. So that's the money there, I would say. The gap between these two lines, it represents your better management, right? And it is what qualifies you for the carbon credit. So you are not just managing your land for timber value, but also you are managing for carbon value. But again, we have to think about integrity issue. The carbon credit must be real, measurable, and above what would have been happen otherwise. So it should be different than baseline scenario. If your practices cannot change the carbon stock in your forest, then there is no need to enroll in this program. But definitely if you extend your harvest rotation, it will have some impact. Now, how does your property qualify? Same as we talked about soil carbon. To qualify for a forest carbon program, your land must meet some basic criteria. First of all, the size. Most bigger programs want bigger aggregates. Even let's say they will also say 1,000 acres, at least 5,000 acres. But there are some programs which allow smaller landowner like yourself, 30, 40, or 100 acres can enroll in this program. The second is species mix. What is your forest composition? Hardwood and conifers all together, mixed forest is usually preferred rather than plantation forest. And then natural regeneration is preferred mainly for the carbon project. because the potential of carbon storage is higher if you have mixed or diverse community or diverse forest, right? Now, the third one is the management potential. If you have harvested in the past in your land, then there is more room to improve, right? So active working forest land are preferred in the carbon project. Lastly, but not least, ownership again. You need to have clear title and a longer term outlook and the readiness to enroll in this program, because forestry program right as of now does not allow year by year contract. So you either need to be enrolled for 20 years or 40 years. These are not short term programs. That means you are rewarding yourself for lasting stewardship. And I think forest is all about that thing, right? You own a forest, you transfer your forest land to your child, your grandchild, because you want your next generation to enjoy same bountiful resources like you did. And I think if there is extra revenue opportunity because of this program, then why not? I think I'm all about this. Question you should ask to the forest carbon developer. These are the important questions you have to consider. First, what happens if I sell or pass my land to my next generation? You want to make sure the contract can transfer very cleanly, so there are no surprises for future owners or for your family. Actually, you can transfer carbon project to another owner, so this can simplify the thing. Now, the second, what are your obligations for monitoring and verification? Some programs require regular reports or third-party audit. So you want to make sure those are all written down in the paperwork, because you don't want somebody to come at midnight, knock your door, and I want to check your carbon credit. How many credits you have? So you don't want to do that. So that's why everything should be written carefully in the contract. Now, the third thing is about harvesting. If you are an active logger or harvester, you want to make sure whether you need to change your harvest plan or not, and make sure how much you can harvest from the land so that you don't cross the threshold. The fourth one is the carbon prices. That is important. If your payment depend on the carbon prices, you will want to understand how market changes might affect, right? So that's why you want to understand the integrity in this market. What is going on? What are people doing to tackle those challenges? So that is really important. The fifth one, I would say, is local expertise. If this developer have track record working in your area, Lake State or Midwest, then you should prefer those kind of developers, because local expertise, local knowledge about your trees, local forestry is very important here. You don't want somebody flying from Florida and then check your trees, right? You want somebody who is right there in Midwest. So that's another thing. Now, lastly, this is really important because the question is, does the program offer fixed payment or are payments tied with carbon credit sale? It's tied with the carbon prices, but this is a little bit different. There are some programs who pay you fixed cost. They will not say, okay, we'll provide you money after carbon credit sale. They will just pay upfront the fixed payment, which is nicer, right? It provides predictable income regardless of market fluctuation. And all the risks related to carbon credit sale, it goes to the developer, not to you. So think about those type of program also, whether it's variable price or fixed payment. Now, since we covered soil carbon, forestry carbon, we talked about integrity issue, all carbon market related stuff. Let's switch gear towards the end and talk about why Compeer is here, by the way. We are not forest carbon developer. We are not soil carbon developer. Then why even we are talking about this thing? Here is the answer. We are your trusted partner from a long, long time. We are partners with our farmers, with our forestry clients. Client is everything to us at Compeer. That's why we are trying to help our clients navigate this new opportunity. We want to ensure these programs work for you. Not all programs can work, so we are here to help. And as you all know, we are expert in agronomy, expert in forestry, and mostly we are financial expert. We can help you navigate this market, guide you through all these challenges in this market. The main point, we are committed to the success of our client. If you grow, if you earn, we'll be rewarded too. That means rewarded as a client satisfaction. So this is very important to us. So based on these points, Compeer has started our carbon access program. We have soil carbon program and we have a forest carbon program. Our job is to evaluate the programs and vet these developers for you so that you don't have to spend like years to navigate which developer to use, whether to go there or go here. There are so many companies in this space. There are multiple carbon programs available. So whom to choose? We will not say some are good companies or some are bad companies. Everybody is doing their business. They are all doing a really good job. But based on our evaluation and suitability for our clients, we are happy to announce, and it's already been launched, we had 2 soil carbon programs for our farmers client. The first one is Carbon by Indigo, and the second one is Soil and Water Outcome Fund. The Indigo program, it is focused on generating offset credit with strong registry-backed system. These are tied with selling the carbon credit and then providing revenue based on the carbon credit sale to the farmers. Now, the second one is Soil and Water Outcome Fund, also known as SWAF. This one focuses on insetting of the carbon credit, meaning companies pay farmers to reduce emission within their own supply chain. Rather than buying credits from some other companies, they will pay the farmers. So both of these programs offer payment, technical support, and guidance throughout the contract term. Compeer role is to help you guide and reach out to these guys and enroll in your program and see whether your land is suitable or not. After soil, we'll talk a little bit about Forestry Carbon Program. On the forestry side, our initiative, Compeer initiative, is we are currently revising our Forestry Carbon Program as we speak. Previously, our forestry program, the landowner size was, we had a limitation, only starting from 5,000 acres. Recently, we switched our gear and we are saying our landowner size for Midwest can be 30 acres or higher. So we want to help all the landowners, forest landowners in our area, not only bigger landowners, also small landowners, landowners who have their hunting ground, who have their farmland and then forest land together, all those clients. Now, this program allows sustainable harvesting. So that means there are many forestry carbon programs which will say you, okay, don't harvest, but maybe harvest a little bit. But the programs that we are looking at currently allow really good amount of harvesting also. The contract length size is, you can have either 20 years contract or 40 years contract depending on the program. And we are announcing or we are planning to roll our forestry program later this year. We are currently in conversation with a developer right now as we speak. The contracts hasn't been finalized, so stay tuned. I think we'll probably announce our forestry carbon very, very soon. But regardless of this announcement, if you have land or forest land which is about 30 acres or more, you can reach out to us. We are here to help. We can evaluate your property and then we can guide you through this process. Final thoughts. What we learned today. Carbon market is the growing opportunity. We don't want our landowner to miss out this opportunity. So that's what we are here for. They can offer real financial opportunities and new revenue stream for farmers and landowners, forest landowners. Program fit is critical. Not every property or owner is a match. So it all depends on your land characteristics and all those things we talked about before. Important thing to consider is integrity matters. High quality credits require real, additional, and verifiable improvements. Always choose credible partners and program. And that's where Compeer comes. So we'll help you on this journey. We are here to guide you. We'll help you navigate the option, understand the commitment, and align carbon opportunity with your operational goal. Thank you very much for listening to me.
Well, really nice job, Anil. The pace of this can be tough because obviously there's a lot of ground to cover, but you did a nice job stitching it together and appreciate you calling out the differences between soil and forestry carbon. So thank you for everybody joining us today. And Anil, thank you for your time and your expertise. We look forward to working with everybody in the future.
Thank you very much, Hal. Thank you for joining us today.
Thank you for listening to Compeer's Ag Edge. You can follow us on Apple Podcasts, Spotify, or your favorite podcast app. For more agricultural finance insights and resources, visit compeer.com. That's COMPEER.com. Until next time.